Fresh off a record year in oil profits, countries across the energy-rich Gulf have added to their stockpiles of cash despite an uneasy global economy. Looking to better coordinate what it does with that wealth, both at home and abroad, the UAE announced it will create an investment ministry. Long dependent on hydrocarbon exports to fuel its economy, the UAE is looking to move away from oil. The UAE's Prime Minister and ruler of Dubai made the announcement earlier this week on Twitter, saying the ministry aims to make the country more easier to invest in. While the UAE looks to attract global investors, it's also home to several sovereign wealth funds that manage over $1 trillion in assets. Some of those investments have gone to places like Turkey. Last month, Turkish Vice President Cevdet Yılmaz visited Abu Dhabi, saying a major framework agreement was being negotiated with the UAE. President Recep Tayyip Erdogan is also set to embark on a tour of the Gulf to attract more investments. And to further discuss the UAE's new investment ministry and wealth funds across the Gulf, joining me now from Istanbul is Taha Meli Arvas. He is a professor at Bogazici University. And from Abu Dhabi, Suha Cubukcuoglu. He is a senior researcher at Trends Research and Advisory. A warm welcome to you both, and thanks for joining me on Straight Talk. So, Taha, how important is the creation of an investment ministry by the UAE? What difference will it make on the Gulf countries' economy?
I think it'll allow them to more focus their attention and to decide where exactly they want to invest, and more importantly, what that'll mean for relations with that country, the UAE, and the invested target. So it's important to have this set up so as to allow for a better strategic planning and for better focus.
So, Suha, how have the Gulf states' dependencies on hydrocarbons pushed them to diversify their economies and sources of income? And will they be successful in finding new sources of revenue away from energy?
Yeah, I mean, the war in Ukraine has benefited Gulf countries, actually, because the world dependence on them has increased, and so did oil prices. And we should see, for instance, the decision of the OPEC Plus to cut production to prop up prices from that angle. Let's remember also that the UAE's GDP, 30% of it comes still from oil. But despite higher, tighter global financial conditions, their non-oil real growth will remain strong this year at about 5%. So this is a drive to move away from hydrocarbon dependency with a long-term vision. And each country in the GCC, the Gulf Cooperation Council, has a similar vision for post-oil economy to grow their services and manufacturing sectors, and also diversify their investments, both at home and abroad.
So, Taha, is this going to be an easy transition? And do you believe that these investment funds are sustainable and feasible?
Sure, absolutely. I think this is what the UAE has been doing for the last several years here, and has been doing very successfully. These sovereign wealth funds and now this investment authority will allow countries like the UAE to punch much above their weight class, if you will. Its power way beyond what they may have as far as land area or as far as geography or even military might. It's a new type of might that's really burgeoned in the last 2 decades. And we see other countries like Norway, for example, that has similar strengths. So they'll be able to use this strength that they have to influence policy globally.
So if you will, I just want to briefly go over just how much money the Gulf states have at their disposal. So the region is home to some of the world's largest sovereign wealth funds. The UAE alone has 7, managing $1.5 trillion in assets. They're followed by Saudi Arabia, where its 2 funds control just over $1 trillion. And Kuwait's sovereign wealth fund is known to be the world's oldest, holding $750 billion in assets. Bahrain and Qatar round out 4th and 5th place when it comes to sovereign wealth funds, each managing hundreds of billions of dollars. So, Suha, considering the tremendous capitals these countries control compared to their small populations, are we likely to see more investments beyond the Gulf, and what will they look like?
Yes, and we already see that actually. So if we look at, for instance, specifically in the UAE, the three main sovereign wealth funds, ADIA, the Mubadala, and ADQ, they have investments all across the region, from Central Asia to Caucasus and Africa to Europe. We're likely to see an increase in that. And just to give an example, for instance, the ADQ has, set up a technology fund for startup investment in Turkey last year with the Turkish Wealth Fund. And Masdar, for instance, it's a renewable energy investor. It invests in renewable energy worldwide and plans to invest, say, around $50 billion in the next decade. And increased its portfolio in renewable energy. So we're likely to see more outward investment from the UAE, Saudi, Qatar, and Kuwait. And if you look at, for instance, their FDI, foreign direct investment, UAE ranks actually the first in Turkey in terms of overall Gulf cooperation countries' investments, which totals at around about $11 billion. So about, let's say, 1/3 of it comes from the UAE, and that's set to increase with the new comprehensive economic partnership agreement that the two countries signed this year.
So Taha, lately we have also seen the Saudis enter global sports with their investments. How big is the Western appetite to have Gulf money flooding their markets?
Well, I think most recently, the war between the two Gulf associations is a great example of that. The PGA Tour was very much against the Saudi-backed Leave Golf Tour, and they really went at it for the last couple of years, and were very much enemies until the very end, until the PGA Tour realized that it didn't make sense to go up against such a massive behemoth of a force, and they agreed to put these misunderstandings, let's say, behind them, and to join forces. So there is a huge appetite for this investment. We're looking at a potential global recession here coming, and these countries with these massive war chests will be the belle of the ball, and people will be courting them. Western countries especially will be courting them left and right, because really such a large amount of free cash isn't available in much other places in the world.
So Suha, what's the shape of Asian investments in the Middle Eastern funds?
Yeah, China has been one of the major investors in here. Of course, has made quite large strides in recent years. Let's remember the Arab-China Business Summit that took place in Riyadh last month, where values on the figures of like $10 billion of investments were agreed by both parties. That is likely to bring more Chinese technology inflow, capital, human, labor also in the region, into more critical sectors such as telecoms, ports. And there is even controversially, discussion of whether the Chinese are looking to set up military bases in the region. There are unconfirmed reports around those. So it's certainly increasing its clout, given also the diplomatic reconciliation it brokered between Iran and Saudi Arabia most recently. It emerged as a more kind of benign actor, and that's trying to fill in the vacuum supposedly left behind by the gradual U.S. withdrawal from the kind of disinterest, let's say, not withdrawal, but a pivot away from the Atlantic and the Middle East towards Asia Pacific in Washington. So I think China is filling in that vacuum.
So what do you think, Taha? Is the Gulf likely to become a new hotspot in the U.S.-China rivalry?
I think it is. I think it's very much up for grabs with this pivot away from the Middle East, from the United States. We saw most recently something surprising. Of those sovereign wealth funds that you're talking about, Saudi Arabia is distinct in that it has a very large population. They're very young. It has a lot of expenses. So it's really an existential move by Saudi Arabia to make sure that this money will last, that it will help their economy and their country, frankly. Whereas the other countries, if they did nothing for the rest for the next 100 years and just invested that money in very very riskless assets, they would be fine, their people would be fine. In fact, we saw Saudi Arabia and the UAE go to war a little, with Saudi Arabia saying, if your headquarters are in Dubai, we're going to have problems. So you have to move your headquarters from the UAE to Saudi if you want to continue doing business with us. So there is this these undertones of conflict between the two in an attempt to attract attention. But be sure that all Western financial centers are very much attracted to the area and will continue to be so for the foreseeable future.
So, Suha, how strong are the Middle Eastern funds against the volatility that's hitting the global markets? I mean, are they immune to geopolitical risks?
They are becoming so, and most of them are. Yeah. For instance, if you look at the Abu Dhabi Investment Authority, and most of their income has been through the state's sale of oil and the revenues that flew in from that. And what for instance, differentiates the UAE from the rest of the Gulf region is that it's moving in its investment up the value chain into such as healthcare, technology, mobility, and clean energy sectors, into more higher value added sectors. That's kind of acting as a cushion against unsystemic shocks or global downturns, to sort of more smooth out its revenue stream in terms of economic diversification and businesses across the world.
All right, gentlemen, unfortunately, we'll have to leave it here. Thank you very much for joining me on Straight Talk.